Good afternoon. Welcome to Midcap Trader. I'm Sonal Bhutra, and in a bit, Mangnam Malu will be joining me as well. Markets in the green, but they've come up from the highs. We'll discuss that and a lot more. But first up, the top headlines. Stocks trade ranged as the street awaits clarity on the ministerial berths to be awarded to 71 ministers sworn in, along with the Prime Minister on Sunday. Realty and PSU banks are prominent gainers, even as IT drags mid-caps in line.
Fertilizer stocks like National Fertilizers, RCF, GSFC surge in trade after PM Narendra Modi signs the Kisan Samman Nidhi Yojana after taking charge. Says the government is fully committed to Kisan Kalyan.
Axis Gates Technology begins delivery of advanced counter-drone systems under a landmark order from the Indian Army. The stock surges over 5%.
KEC International up over 6% after bagging orders worth over 1,000 crore rupees across its various businesses. Management tells CNBC-TV18 they're sticking to their revenue guidance of 15% in FY25.
Okay, all right. Those are the top headlines. Mangnam, the GIFT Nifty was indicating it could be a day in the red. We are in the green, so nothing to worry about that. But it has come off from the highs, from the opening highs for sure. Around 70 points on the Nifty. It is managing to be at that 23,300 mark. The mid caps are the ones which are underperforming today. So in last couple of minutes as well, we have seen a further downtick of the mid cap index. It's absolutely flat with some positive bias. The banks, they are doing well, at least better than the benchmarks for sure, and IT, that continues to drag, and that is the one which is putting some pressure on the Nifty as well today.
Yep, the only one thing we can say is that after a very eventful all of last week, where on a daily basis we would see swings of over 500 points, if not 1,000 points on certain days, we're back to regular programming. Let's put it that way. The Nifty holding around record highs. Today's high was a little over that 23,400 mark after a big move of over 3% all of last week. Maybe it's time for consolidation, and consolidation isn't particularly bad as we await bigger triggers like who gets what portfolio and eventually leading up to the budget from a month from now thereabouts. So that is something that we will keep our eye out on. And at the same time, for the IT pack, it had done very well all of last week. Then after close on Friday, we got the news that the jobs in the US were a lot higher than what the street was anticipating. That led the US yields to spike. And later this week, we also have the FOMC outcome telling you that maybe rates are going to be higher for longer and rate cuts are perhaps off the table. That does not bode well for an external facing sector like the IT itself. Perfect for profit booking after the rally that we had seen on Friday itself. But that's not the market. A lot of individual stocks are moving and shaking around. We have Hormaz joining in to take us through all the mid-caps that are moving about in trade. Hormaz.
It would have been even more regular programming if the broader markets were doing well compared to the benchmarks, but they are still consolidating, as is the overall market as well. It'll pull up the gainers on the mid-cap index first up, and Titagarh Rail continues to move higher, now above 1,300, 9% higher there. Karur Vysya Bank has sprung up here at the highest point of the day, 6.5% higher. Fact, along with all of the fertilizer stocks, as you just mentioned, is doing well, 10.5% higher, but of course, barely any float in the market for Fact. Intellect Design, Arena and Raymond also doing well in today's trading session. What's doing well again are cement stocks, and those are the ones that are gaining today. Almost every cement stock trading with substantial gains of anywhere between 2 to 5%. Shree Cement, JK Lakshmi, India Cement, all of them having a good day. As you again highlighted, IT not having a very good day. Midcap IT is leading the losses here. Coforge, Persistent, Emphasis after that mega block deal that took place early this morning, 3.5% lower there as well. Stocks that are doing well on the back of strong volumes, and Kenpla Sanmar here as well, 14% higher for the stock with very strong volumes. Kaplan Point, Motilal Oswal trades ex-bonus in today's trading session, so up 8.5% after that. And Happiest Minds Technology is also trading 8% higher in today's session. Lastly, the underperformers in Suzlon after that negative development that came in with regards to their independent director quitting, 5% there gone. For IRB Infra seeing some profit booking after the surge it saw recently. Poonawalla Finance and Aegis Logistics also not having a good day. Back to you guys.
Okay, all right. Thank you so much, Hormaz, for joining us with that list. So quite a lot of gainers as well, along with the losers that we're seeing in the broader markets. But it's a good time to welcome Ashish Gyal of Waste Strategy Advisors for a technical check on the markets. Ashish, good afternoon. Thank you so much for joining us. Well, we have maintained those levels in the green and above the 23,300 mark so far. What are you suggesting, the next moves on the Nifty and mid-caps as well, because that's been underperforming?
Hi, afternoon to you and all the viewers. If you look at market, we saw a lot of choppy moves in last week, and I think market is trying to digest that. The good part is that we are able to sustain about the 23,000 mark, and we are managing to protect that 23,250 support levels also, and touching the lifetime high. So the overall tone, I think, will remain on the buy side. Any dip from here around the levels of 23,300 or 23,250 can be used as a buying opportunity, as long as on the downside we are protecting that 23,150 mark, and on the upside we can expect the levels of 23,500. So the undertone remains bullish. As far as mid cap, small cap indices are concerned, we can see there has been a very sharp recovery in the last week, and some consolidation cannot be ruled out. Even in Bank Nifty, we can see a lot of recovery happened and some consolidation. So this week I'm expecting that there can be a major range mount kind of a movement, and we can also see for Nifty around 23,000 there has been build up on the put side, so that can act as a very important support, and overall tone remains bullish. So after the consolidation, the breakout should happen on the upside, so I'm optimistic for the broader market also.
All right, you're optimistic for the broader markets. A lot of the summer stocks doing extremely well, Ashish. You know, we have Varun Beverages, which has moved higher. Even as we look at the start of winter, everyone's looking at the phenomenal summer that was. Whirlpool, for instance, is up around 5%. We're seeing some traction come by in Symphony as well. Earlier today, we had Shilpa tell us that, you know, all these companies saw massive growth this summer after 3 years of really no good sales coming in. So do you have any of these in your picks today? And what are the other stocks that you would recommend?
Yes, Varun Beverages, if you look at the overall stock, I think it should perform well. We can see it has bounced back from and trying to move above the upper Bollinger Band, so giving a breakout there, and the volumes are picking up. So the overall stock looks bullish to me. I think Varun Beverages can be a good stock to add in the portfolio, and we can expect it to move towards the level of around 1700 on the upside. The stock pick that I have is GNFC. We can already see the sector has been buzzing around, and GNFC has shown a very strong bullish candle formation right now, possibly formed a double bottom and is moving on the upside, crossed that 20 days average also. So the overall tone for GNFC is bullish. We can expect a target of 720. Stop loss can be maintained at 645. And the next stock is General Insurance Corporation. We can clearly see a very strong breakout happening in the stock, formed higher low pattern, suggesting the start of an upward wave here. And one can create long position in General Insurance Corporation for the target of 415 with a stop loss of 375.
Okay, all right, Ashish, thank you so much for joining us today. So those are some top picks coming in from Ashish Kyal of Wave Strategy. Let's slip into a short break. When we return, we'll be joined by Ravi Chawla, the Managing Director and CEO of Gulf Oil Lubricants, to discuss the business outlook going forward. Stay tuned for that. Welcome back. You're still tuned into Mid-Cap Radar. The stock on our radar is Gulf Oil Lubricants. Company reported a strong set of fourth quarter numbers. They maintained a growth momentum for the year with volume growth rate at 2 times the industry. But what's the outlook going forward? What are the growth plans and the capex outlook? Ravi Chawla, the MD and CEO at the company, is joining us now to discuss the same. Mr. Chawla, good afternoon. Thank you so much for joining us. Well, the street definitely liked your numbers, and you spoke about strong growth across all the segments except OEM factory fill. Can you define those growth levels in different segments? What did well for you? And what happened to the OEM factory fill? Why did you see a decline there?
Yeah, so overall, as you said, we have grown to 2x the market growth rate, which is around 2 to 3%, 3 to 4 in certain segments. Obviously, lubricants, as the quality improves, the percentage growth is not in line with the growth of the automotive industry, which some of the segments are growing at 10%. So we saw a lot of growth in our industrial and B2B segments. In our franchisee workshop across automotive, we've obviously shared that, commercial vehicle oils, agriculture and motorcycle had an uptick in the Q4. So these continue to grow, and factory fill, where we are majorly supplying when the vehicle leaves the plant, new vehicles, is mainly commercial vehicles where we have seen a dip. and that's about 8 to 10% of our volumes. Otherwise, we have seen green shoots right across all the segments I mentioned, and even the market is growing. Some people say 3-4%. That's the kind of growth which is a positive sign going forward as we see a lot of growth across.
All right, if the market grows at 3-4%, then you still hold on to your volume guidance of 2 to 3% industry, 2 to 3 times industry growth, right? Because then that growth becomes from 9% to 12%.
Well, you're right. So we've been saying that. So that is why I gave a figure of a range. So in some of the segments where we have good market share, we definitely look at 2x the market growth rate. And some of the segments where we have less than 5% market share, we look at higher than that. So on average of that, if the market does grow 3%, we would look at high single digit. And, definitely internally, we try to get the 2 to 3x. So if it is growing 4%, definitely look at double digit volume growth for us.
Right. This is about growth in different segments and you continue to maintain that positive outlook. What about price hikes? You took the first price hike after 12 to 15 months. First, what led to this? And second, will you see more regular price hikes in different segments, or is it going to be, again, once in 1 year phenomenon?
Last couple of years, we have seen a lot of price hikes. So as you're right, recently the one we had was mainly as a result of we had some increase in the chemicals, additives, and other costs like base oil went up a bit. So some of it gets passed on in the B2C segment based on our pricing, and that happens as a 1 or 2 month lag time. The B2B business requires a lot of there's a price variation clause with OEMs, so that happens a bit later. So yes, a price increase has happened in the B2C segment, and we are seeing now that, of course, some of the base oil is steady. So we'll have to wait and watch, but there had been an increase for which we did take an increase in the last month.
Right. So no near-term increases right now, right?
Yeah. So it doesn't look like now, it looks steady, but yeah, whatever has been done, of course, OEM pricing and B2B would depend on the price variation clauses.
All right. What about the battery business? You did about 80 crores in FY24. What's the target for FY25?
So we'd like to, again, our market share, we are amongst the top 5 players in the replacement market in two-wheeler batteries, where we've extended our brand. So we want to increase our touch points and again, look at a double-digit growth here. And there is competition in this industry, but we are growing with our strength of our synergy of our distribution, because we have a two-wheeler motorcycle oil and it goes with that in terms of outlets. So we want to grow double-digit. The vision is, of course, to take the turnover in the next 3 to 4 years to double. And also start, we are breaking even now in terms of our margins there. But we also want to look at that becoming a profitable segment, though it's a very small part of our business today.
Yes, but the street is betting a lot on that as well, and so are you. So can you give us a sense of by when it'll be profitable? Will it be next year? And when you say double-digit growth is what you're expecting, is it high double-digit or low double-digit? Just to get a sense of what this business would look like, say 2 to 3 years down the line.
These are conventional VRLA batteries. So these are not the new age batteries. This is a replacement battery we do. And we have a synergy with our distribution. So as we mentioned, it's about 80 crores. We're looking at about 200 crores in 3 years from now. So it's an add-on business, I would say. Our focus is obviously to continue growing our core business. And that is lubricants, automotive, industrial, which is where we are really making our market share gains. So I think battery business is an extension in terms of market share gains for us.
Right. And what about the EV capex? Is there anything that you have lined up?
Well, we have invested, as you know, about 150 crores in 3 entities. One is Indra, which is a global company, UK-based company, where we have investment from India and also a global Gulf Oil International. And that is something which is the AC slow chargers for cars, which is what we are planning to bring to India. The other is a company we got in October last year, we started and completed in December, is Tyrex, which is making fast DC chargers, right, from 30 kilovolts to 240. This is a very interesting investment we have made, and we work with the founders to try and increase this. They have about 800 to 1,000 chargers already established. This is about 100 crores plus we have invested with that. And that is where we see the fast charger business becoming a large part of the play there for Tyrex to become, they are a good competition there. They have a good position there. So this is potentially, it can look at, about 400-500 crores in 5 to 6 years in terms of revenue, obviously based on how the chargers develop every, buses, 3-wheelers, fast chargers for cars. So the Indian market is going to evolve, and that's what we are looking at for Tyrex, where we are making investments in terms of the capacity, in terms of technology and the people.
Okay. Last question before we let you go. Wanted to understand the AdBlue volumes. What was the growth this time around? And what is the current market share here and the growth plans?
Yeah, so AdBlue is a very, I would call it a supplementary product to our diesel engine oil because, all the BS6 vehicles use AdBlue, which is a consumable. And we've been we had planned this many years ago, but now I would say the market is quite good. And, just to give you an idea, if you use 100 liters of diesel, you need to use 3 to 4 liters of AdBlue because it helps to reduce the NOx emission in the emissions that come out. And this is, we have done, I think 37,000 KL in quarter 4. So it's a market that will keep growing 20%. And today with our distribution strength, with our go-to-market strategies and OEMs, we are, I would say, in the top 3 here. And it's partly organized and partly smaller players also. So I think this is a business which is supplementary to us. And we use our distribution and our OEM relationships to grow in this. And I think there's a fairly good growth rate here. And we have seen a good surge, I would say, last year. But going forward, I would say we would anticipate about a 20-25% growth in this.
Okay, all right, 20 to 25% growth going forward in the AdBlue volumes. Thank you so much, Mr. Chawla, for joining us today and giving us that perspective on the business going forward. That's Gulf Oil Lubricants. By the way, just quickly take a look at the Nifty and the Sensex. Both of them have inched a little higher, and that's courtesy of what's happening with the bank. So ICICI Bank, that is at the day's high, and so is Axis Bank. So a slight uptick which is underway. We'll have to see whether market builds onto that or not. We'll do one thing, we'll slip into another break. When we come back, we'll focus on some stocks buzzing in trade, so stay tuned for that.
Welcome back. Even as we were talking about a lot of stocks doing extremely well, the one stock that has doubled in the last few trading sessions is Heritage Foods after a near 100% rally in the last 12 sessions. Remember, this is the company that is promoted by Andhra Pradesh's Chief Minister-elect Chandrababu Naidu's family. This year has been the best in the stock's calendar year performances so far since 2012. Hormaz has done some number crunching out here. Joins us with more. Hormaz.
All these Andhra-based companies have been on a tear ever since the results of the assembly elections were declared and Chandrababu Naidu was the Chief Minister-elect after his TDP won a majority in the assembly. But Heritage Foods, of course, is one of them because it's promoted by his own family. It has become a public company in November of 1996. Now, the direct link, of course, is that Chandrababu Naidu's family promotes the company. Now, he's been Chief Minister of Andhra Pradesh 3 times previously, once between 1995 and 2004 for 2 terms, and then also between 2014 and 2019. Now, in his years as Chief Minister, if you would see the stock, the Heritage Foods doubled in 1998, almost 4x in 1999. It doubled in 2002, almost tripled in 2003 as well. And if you look at his most recent stint as well, from between 2014 and 2019, for most of the year, most of these years, the stock gained anywhere between 50 to 80% every single year before some bit of correction that came in 2018 and in 2019. Now, for the most recent move, the stock has almost doubled, as you mentioned, in the last 12 sessions. On the 23rd of May, the stock closed somewhere around 324. Today's high is around 354, beg your pardon. Today's high is around 727. So taking the total calendar year returns almost 140%. Now, the best calendar year it has had since 2012. That is when the stock had gone up 240% that year. Now, the family here, in this case, Chandrababu Naidu's wife, Bhuvneshwari Dara, holds a 24.3% stake. Son, Nara Lokesh, he has a 10.8% stake. As of 23rd of May, that stake was around 1100 crores. Now it's worth 2400 crores after this recent rally. For primary source of revenue for Heritage Foods comes from milk, which is almost 60% of the business, and then the rest add up as well. Now, the company has been engaging in a lot of innovation as well. They launched a new range of pure ghee laddus as early as on the 5th of June under the Truly Good brand. They also launched a new range of ice cream for kids. They also introduced new packaging formats for its farm fresh milk and for its whey-based energy drink. So plenty of innovation happening from the stable of Heritage Foods as well. But a big deal that took place today, there was a block deal that happened earlier in the day, around almost 5% equity changing hands, 44 lakh shares, almost 320 crores. They exchanged hands. Buyers and sellers are unclear. The transaction took place at an average price of 725. So as soon as the deal happened, you can see that big sharp intraday dip that came in the stock, and then the stock has recovered from there. But Heritage Foods, of course, like most other Andhra companies, has been on a tear, the stock doubling in the last 12 days.
Take that point, Hormas. Thanks a lot for putting that in. And those who would have been holding these shares in the last 12 days may perhaps go and buy some of those laddus that you mentioned as well to celebrate. But the other stock that you're talking about right now is Zensar Tech. Nuvama has written on it after the company's annual investor conference. Sonal, what have you made of that?
Well, while the mid-cap IT is not doing so well, Zensar, which is doing well, up around 3.5% in trade. And it was the annual investor conference and Nuvama has written about it. The management is focusing on existing client farming. Additionally, they are also talking about a lot of cross-selling opportunities within clients as well. They are looking at securing large deals and expanding managed service offerings and also optimizing EPS growth and not just the revenue growth. So they are focusing on bottom line growth as well going forward. The customer and employee satisfaction metrics have improved visibly last year, and of course, along with customers for IT companies, the employees are as important part as well. Zensar says they will incrementally focus on increasing the contribution from large deals and managed services, and it has invested in building domain capabilities, particularly in the BFSI space, something which was not doing well earlier, and now it has picked up for most of the IT companies, which is bearing fruit. It is also looking to replicate the same strategy in other verticals where they are putting in a lot of focus as well. Nuvama has a hold rating with an unchanged target price of 650 rupees a share, but the street seems to like what Zensar is saying because it is happening on a day when the other IT companies or the other IT stocks are not doing so well. The stock is at the day's high.
Absolutely. Thanks a lot for that. So that's about a near 4% move that we're seeing for Zensar Tech. On the other hand, we have the management. We had the management of KC International this afternoon. The stock is surging after the company secured new orders worth over 1,050 crores. The company's order intake in this year so far has been over 3,000 crores. Earlier today, we spoke with Vimal Kejriwal. He did maintain his 15% revenue growth guidance with margins over 7.5% in this year as well, and also 25,000 crores in terms of order inflow. Let's hear him out.
We do expect that with the new ministry coming in and with a little less focus on political gains, I think we'll see a lot more spend happening on infrastructure and also focus on completing the infrastructure project, which should help us in sort of clearing up the issues which are stopping the execution. So we do expect that railways should start turning around this year. So downside risk, I think, continues on the geopolitical side. Although we have factored all the Red Seas, etc., into this, most of our metal exposures are hedged. I think the only piece which is unhedged for us remains steel, which is not very easily hedgeable. L1 position, we are at 8,000 crores now. So we are at 8,000 after this 3,000. They are all in the transmission T&D sector. Everything. I think roughly half of it is in India, or slightly less than half of it in India. The rest is international. It would be between Saudi and UAE. I don't know which one will get more orders, but between the two, I think we should get a lot of orders. US, there's a huge market, but for us, it's a supply market. So it's constrained by what I can supply to them. Otherwise, I can take more orders in US, but I don't think I'll be able to do too much more in US.
Okay, that is KC International. The stock is higher by 6%, and a couple of stocks in the Nifty pack also which are doing well now. We have Asian Paints, which is moved off from the lows of the day. That stock is up around 0.6%. Axis Bank and ICICI Bank, those are the other two names that I'm watching out for. Those are also lending some support to the Bank Nifty as well. Cipla is the other one that is also off its lows and doing well in trade right now. So watch out for these names. And the mid caps, they continue to underperform the benchmarks. Mid cap index is up around 87 points. But as we wrap up on the show today, we leave you with some market outlook coming in from Rana Gupta of Manulife Investment Management. Stay tuned, your stocks when we return.
We do not think as a result of this election there will be a U-turn of sorts, but we definitely think that there will be a much better balance going forward. While the revenue expenditure, while the capital expenditure can grow at 10 or 12% as opposed to 14-15% earlier, but the revenue expenditure has some room to go up from the current levels. In other words, I think we expect there will be some welfare measures that will make a comeback. And that is, again, not a U-turn, but a much needed balance that should come back. And that should come back in the areas of education, healthcare, and also through welfare infra-linked, like, housing, so on and so forth.